Good afternoon, traders. This is Daud from Elliott Wave Forecast.com. Welcome to today's video chart of the day, in which we're going to take a look at the price action in the US 10-year yields. Okay, this is a 60-minute chart. All right, and we think that the 10-year yields are doing a flat correction in wave X, which is expected to end with another high, as you can see here, shown on the chart. All right, so now flat is a 335 structure. All right, so let's say this is the start of the flat here, and then you get three waves up in A, three waves down in B, and then you would get five waves or five swings in C leg. And then of course the decline or the trend would resume. Okay, so we think that we have already seen wave A and B of the flat in place, okay, which you cannot see here, the entire subdivision of wave B, but we think it ended over here at this low. And as flat is a 335 structure, so now we needed five waves or five swings in the C leg. All right, obviously the move up from this low here, this is not clearly impulsive because the subdivisions are not that of a clean impulse wave. Okay, this is overlapping choppy price action here. So we think that wave C in this case is taking the form of a diagonal, all right, in which we're looking for five swings and not five waves, right? So I mean, we still got the usual extensions here that you would look for. There is enough extension here, more than 1.618, as compared to this first swing here to call this the third swing. And then here, if you run your retracements from the actual peak, all right, and it stopped pretty much at the 23.6, 38.2 fib area of the move up from this low to this high. However, we think wave 3 ended here, and this wave 4, it was actually an irregular correction. All right, so it was a W here, then we had a flat in X, and then this decline here was wave Y, which completed wave 4, and we think that this cycle is over now, and yields are headed higher in wave 5 to complete this flat structure here, and then they should turn lower and resume the decline for new lows below here, or at least three waves lower toward the 50 to 61.8 Fibonacci retracement of this entire move up, right? So, I mean, so far so good. We think wave 4 is most likely over. Ideally, price should now stay above this level here, or this trend line that you can draw by connecting these two lows here. Now, of course, we're going to try and work out some targets on the upside here for completion of wave 5 of C, which of course is going to end the X wave as well. All right, so the first methodology that we can use here is to run the inverse fib extensions of wave 4, and you would look at the inverse 1.236, inverse 1.618 extension area, which is going to be here. So that's your minimum target there. Okay, that's still going to be a new high above 3 high, so that won't be a truncation, just to avoid any confusion, because we do not label truncations at EWF. But even if you get to only 2.638, which is the minimum inverse fib extension target there, it is still not going to be a truncation, because this is the end of wave 3, and that here was part of wave 4 and not part of wave 3. All right, but that's the minimum target, but of course it could extend to 1.618 inverse fib extension of wave 4 at 2.673, and above that we could even go to the 5 equals 1 target, which is going to coincide with the inverse 1.618 extension of the wave 4, right? So if that level is exceeded, then you go and look at the 0.618 extension of the waves 1 plus wave 3, which is going to take you around this area here. But you would look at that once you have exceeded your inverse fib extension area or the 5 equals 1 target. Then you would look at this level here, 2.72%, and for completion of wave 5 and wave X. So that's your area on the upside. Now, as we are labeling it as a flat here, as in 5 swings and a diagonal in the C leg. Now, obviously, we would need to see RSI divergence staying intact, okay, between the new high and the highest RSI reading that we have had until this peak here. All right, so which is this one. So you could draw a horizontal line here, and you would not want your RSI reading to get above this level, okay, because otherwise the RSI divergence would get erased, and this would no longer be a 5 swing diagonal, and it would then become the connector, and it could do a 6 and a 7, or it will just simply become a triple corrective move up from this low, like a W, X, Y, X, and Z, but it will not be a 5 swing diagonal which is valid as far as this RSI divergence stays intact here. All right. So I hope you enjoyed watching the video, and well, thank you for viewing it. Take care, have a great evening, and be ready to come back to view more videos and charts at our website, which is www.elliottwave-forecast.com. Thank you all. Take care.